Hey capitalists, many of us are just too darn busy to manage our own investments, so we hire a professional to do it for us. In many respects, it's like hiring somebody to mow our own grass. If we don't have the time, the interest, or the skill to do it, we might as well get a professional. Financial advisors aren't like the stockbrokers of old. When they call you to make a change to your portfolio, it's not because they get a commission to sell your old investment and buy the new one. Most get paid a percentage of your assets that they manage for you. Advisory HQ reports that on average, you can expect to pay about 1% annually to have a professional manage your $1 million portfolio. So the more your portfolio grows, the more your advisor gets paid. It's a wonderful system. However, when it comes to private investments, financial advisors harbor a sad truth. They just can't and won't tell you about them. They aren't allowed to tell you about some of the most lucrative investments that you could have in your portfolio because they could face serious reprimand from their firm or regulators for selling away. Oh yeah, and you remember that thing about them getting paid more to manage more of your assets? Well, the reverse is also true. So don't expect them to get excited when you come to them needing $100,000 out of your $1 million portfolio to go make a private investment. So what's the workaround? Well, first, many advisors, broker-dealers have many private investments available on their platform available for select clients, and their options are growing. This is partly because of the recent changes in regulations and the popularity of these types of investments. Not only are investors like you demanding investment options like these outside of the public markets, scholars and researchers are pointing to the benefits of even a 22% allocation to alternative assets in even a moderate portfolio in recent years. The downside to going this route for your private investments is that you're limited to purchase what your advisor's firm has available on their platform, which are typically larger deals from very mature companies. They may also restrict these assets to qualified buyers rather than just accredited investors. Secondly, many of the major firms offer asset-based lending, which is typically cheaper than inflation. On your $1 million portfolio, you may be able to get up to $800,000 for less than 2% a year. Advisors love these types of accounts because they make your investment accounts more sticky. So this is probably the first option that they're going to offer you when you say that you want to make some private investments. Beware, even though repayment is at your discretion, you could be faced with a capital call should your portfolio drop below a certain threshold. Further, don't forget that private investments carry substantially more risk than public investments or those private investments available on your advisor's broker-dealer's platform. If a deal goes belly up, you're still on the hook for that line of credit. Private investments are a great addition to your portfolio, but if your funds are managed by a financial advisor, you're probably not getting what you want. You may be faced with having to develop that portion of your portfolio yourself. If you want to learn more about building a portfolio of private investments for yourself or others, then I strongly suggest this book, Inside Private Equity. This book's got you covered from the theory to the practice of building a portfolio of private investments. Of course, if you don't have the skill, the time, or the interest, you could always hire a professional.